Warren Buffett, the Oracle of Omaha, is renowned for his investing acumen. His strategies and decisions are often seen as a barometer for the market's future direction. With a career spanning several decades, Buffett has built a reputation for making shrewd investments that yield substantial returns. His insights and moves are closely analyzed by both novice and seasoned investors alike. His moves in the stock market are closely watched by investors worldwide. Every decision he makes, whether buying or selling, sends ripples through the financial community. Investors often look to Buffett's actions for guidance, hoping to emulate his success. His investment philosophy, which emphasizes value and long-term growth, has influenced countless portfolios. Recently, Buffett's actions in the housing market have sent mixed signals, leaving many to wonder about his true outlook on the sector. The real estate market, known for its cyclical nature, has always been a challenging arena for investors. Buffett's recent maneuvers have added to the intrigue, prompting analysts to speculate on his long-term strategy. Is he predicting a downturn, or is he positioning himself for future gains? Is a real estate storm brewing, or is Buffett simply making strategic adjustments to his portfolio? The housing market has seen its share of ups and downs, and Buffett's recent decisions have only added to the uncertainty. Some believe he is hedging his bets, while others think he is capitalizing on short-term opportunities. The question remains, what does Buffett see that others might be missing? Buffett's Berkshire Hathaway made headlines by selling its entire stake in homebuilder D.R. Horton by the end of 2023. This move came as a surprise to many, given the company's strong performance. Dr. Horton, one of the largest homebuilders in the United States, had been a significant part of Berkshire's portfolio. The decision to sell raised eyebrows and led to much speculation. This came after a significant investment in August 2023, when Berkshire acquired 6 million shares of D.R. Horton, valued at approximately $700 million. The initial investment was seen as a vote of confidence in the housing market. However, the subsequent sale left many wondering about the reasons behind the abrupt change. Was it a reaction to market conditions, or was there a deeper strategy at play? The move puzzled some, as Dr. Horton had soared 70.5% in 2023. The company's impressive performance made the sale even more perplexing. Analysts have debated the rationale behind Buffett's decision, with some suggesting it was a tactical move to reallocate resources. Others believe it might have been a response to emerging risks in the housing sector. However, Buffett retained smaller positions in two other homebuilders, Lennar and NVR Inc. This indicates that while he may have divested from D.R. Horton, he hasn't completely exited the housing market. Lennar and NVR Inc. are both well-established companies with strong track records. By maintaining these positions, Buffett seems to be keeping a foothold in the sector, perhaps anticipating future opportunities. These holdings, worth an estimated $100 million combined, suggest that Buffett isn't abandoning the housing market entirely. Instead, he appears to be diversifying his investments within the sector. This approach aligns with his broader investment philosophy of spreading risk while seeking value. By holding on to Lennar and NVR Inc., Buffett may be positioning himself to benefit from potential growth in different segments of the housing market. Both Lennar and NVR performed well in 2024, with NVR up 9.68% and Lennar up 11%. Their strong performance underscores the potential Buffett sees in these companies. As the housing market continues to evolve, it will be interesting to see how these investments play out. For now, Buffett's actions serve as a reminder of the complexities and nuances of investing in real estate. Buffett's decision to sell Dr. Horton while holding on to Lennar and NVR Inc. has sparked much debate. Some analysts speculate that Buffett may have taken profits on D.R. Horton's impressive 2023 surge, anticipating a potential market correction. The housing market, after all, is cyclical and prone to fluctuations. Another factor likely influencing Buffett's decision is the prevailing environment of high interest rates. The Federal Reserve's aggressive rate hikes to combat inflation have significantly impacted the housing market. Mortgage rates soared, making homes less affordable and cooling demand. This, in turn, has squeezed homebuilders' margins, making them less attractive investments. While Buffett reduced his exposure to the homebuilding sector, he clearly sees value in certain companies, as evidenced by his retention of Lennar and NVR Inc. NVR in particular stands out as an intriguing case. NVR operates on an asset-light model, meaning it owns less land and inventory compared to traditional homebuilders. This approach allows NVR to be more agile and less vulnerable to market downturns. Furthermore, NVR benefits from the ongoing housing shortage, particularly in desirable locations. With demand for homes remaining relatively strong, NVR is well positioned to capitalize on the market's dynamics. Interest rates are the proverbial tail that wags the housing market dog. When rates rise, borrowing becomes more expensive, dampening demand for mortgages and, consequently, homes. The Federal Reserve's aggressive rate hikes in recent years have had a profound impact on the housing market, causing a significant slowdown in sales and price growth. However, there are glimmers of hope on the horizon. The Federal Reserve has signaled a potential pause in its rate hiking cycle, and some economists even predict rate cuts in the near future. Lower interest rates would make mortgages more affordable, potentially reinvigorating demand and boosting the housing market. The upcoming 2024 election adds another layer of complexity to the housing market outlook. Housing affordability has emerged as a key issue in the campaign, with both parties proposing different solutions. The outcome of the election could have significant implications for housing policy, interest rates, and overall market stability. Uncertainty surrounding the election and its potential impact on the housing market is likely contributing to the cautious sentiment among investors. Policy changes, regulatory adjustments, and shifts in government priorities can all influence the real estate landscape, making it challenging to predict the market's trajectory with certainty. Section 6. Financial Prudence. Dave Ramsey's timeless advice. Amidst the uncertainty and conflicting signals, financial experts like Dave Ramsey offer a voice of reason. Ramsey, known for his common-sense approach to personal finance, emphasizes the importance of financial prudence regardless of market conditions. His advice resonates with Buffett's long-held philosophy of investing in quality companies and holding for the long term. Ramsey stresses the need for a solid financial foundation, including an emergency fund, manageable debt levels, and a substantial down payment when purchasing a home. By prioritizing financial health over market timing, individuals can weather economic storms and make sound investment decisions. Section 7. New home sales and inventory, a delicate balancing act. New home sales and inventory levels are crucial indicators of the health of the housing market. They provide insights into the supply and demand dynamics that drive price movements and market trends. A surge in new home sales coupled with dwindling inventory typically signals a seller's market, driving prices higher. This often leads to increased competition among buyers, making it a challenging environment for those looking to purchase a home. Conversely, a decline in sales and rising inventory can indicate a buyer's market, putting downward pressure on prices. In such scenarios, buyers have more options and negotiating power, which can lead to more favorable terms for them. The current market is characterized by a delicate balancing act. Both buyers and sellers are navigating a landscape where conditions can shift rapidly, influenced by economic factors, interest rates, and consumer confidence. While new home sales have slowed from their peak, they remain relatively healthy. This indicates that there is still a steady demand for new homes, even if the pace has moderated. Inventory levels, though improving, are still below historical averages in many areas. This limited supply continues to support home prices, preventing a significant drop. This suggests that the market is finding a new equilibrium, with neither buyers nor sellers holding a decisive advantage. As the market adjusts, both parties must stay informed and adaptable to navigate this evolving landscape successfully. Section 8. Louisiana Pacific, benefiting from the construction boom. While Buffett's recent moves in the home building sector have garnered significant attention, it's essential to note his other investments that provide exposure to the broader housing market. One such investment is Louisiana Pacific, a leading producer of oriented strand board, a key building material used in construction. LPX stands to benefit from both new home construction and the growing trend of home renovations. As the housing market stabilizes and demand for both new homes and renovations remains robust, LPX is well positioned to capitalize on the increased demand for its products. Section 9, a cautious outlook, navigating the real estate waters. The real estate market is notoriously cyclical, prone to booms and busts. Over the years, we've seen periods of rapid growth followed by sharp declines, making it a challenging environment for both new and seasoned investors. Predicting its future with certainty is a fool's errand. Many factors, including economic shifts, natural disasters, and political changes, can dramatically alter the landscape overnight. However, by analyzing current trends, economic indicators, and expert opinions, we can glean insights into the potential direction of the market. This involves looking at a variety of data points, from employment rates to consumer confidence, and understanding how they interact. Buffett's recent actions suggest a cautious yet optimistic outlook. His investment strategies often reflect a deep understanding of market cycles and a focus on long-term value. His decision to reduce exposure to certain home builders while retaining others indicates a discerning approach, focusing on companies with solid fundamentals and the ability to navigate market fluctuations. This selective strategy highlights the importance of due diligence and careful selection in real estate investments. Factors such as interest rates, government policies, and inventory levels will continue to shape the real estate landscape, making it essential for investors to stay informed and adapt to changing conditions. Staying updated with the latest market news and trends can provide a competitive edge, helping investors make more informed decisions.